Good morning and welcome to the show. I hope everybody is doing okay. Just playing with a little take 5 here. My guitar. As we come towards the open. Anyway, let's get to the stock market. I want to say hi to everybody. You know, it's interesting. I read everybody's comments, and I got one yesterday that I wanted to address for a second really quickly, talking about the market. And because I think it's very interesting. Somebody came on, I'm not sure if they were talking to me or somebody else, but they said essentially like, you know, you're a schmuck if you're not long the market because, of course, as soon as the vaccine comes out, this thing is going to explode to the upside. So, and I kind of want to examine that for a second because, you know, when somebody has a different viewpoint than me, I think to myself, maybe I'm wrong. And I don't know what's going to happen. Certainly the market could rally, but to say, you know what happens when we trade and when we hang out in different chat rooms and whatnot, sometimes everybody gets on the same like page together and puts forward this narrative about what's definitely going to happen. For example, a couple months ago, someone was saying, oh, the market's going to do well, but it's going to sell off in August. So this person's saying, okay, well, you know, you're crazy not to be long the market because as soon as a vaccine comes out, the market is going to rally like crazy. So I wanted to examine that fundamentally for a second. Okay, so let's say that they develop a vaccine, right? So you've got the government has to go into more debt to buy this vaccine, right? And then I've been talking to a lot of people, even on Twitter, who are saying like flat out, I will not take a vaccine when it comes out. So just because a vaccine comes out doesn't necessarily mean the market is going to rally. And, you know, it's funny. Sometimes people will come on and maybe they just started trading or something like that, and they get this idea in their head like, yeah, that makes sense. And you kind of put your all your trading around this idea that like in the back of your mind, I know the market's going to rally in the next month because when that virus or when that vaccine comes out, it's, you know, then that's a lot of the problems are going to be solved as far as the market's concerned, and we're going to go higher. I would challenge you to examine that and try to recognize that we don't know what's going to happen moving forward. I know I harp on this all the time, but something new could be introduced to the scenario here, right? Some unrelated event could tank the market. There could be some sort of like black swan thing. And just, you know, I try to imagine the market being thousands and thousands of people all betting different directions back and forth and having different opinions on things. And so it's not like it's just a group of 20 people of the same mind that like, oh, you know, as soon as I hear that there's a vaccine, we're going to buy it together and this is going to be great. I don't know if you guys have seen this I think it's called Dogecoin. It's a Bitcoin alternative coin, and all these people are saying they're buying this coin thing and it's worth like, you know, a very small fraction of it. The price right now is like, you know, it's a very small fraction of $1, but everybody in their mind, they're like, if this goes to $1, we're going to be super rich. And they're asking people to pump it, like famous people. Oh, can you recommend this? We're all going to get rich. And this is this dream of hitting it big, which is very common dream in the stock market, in casinos, everywhere else. And I challenge you to try to think about things in different ways, because for you to make money in something, that means somebody else has to lose money, right? It's not like we all have an idea in our head that, yes, when the vaccine comes out, the market's going to go up, and then we all buy the market, and then it goes up, and we all sell it. You have to think in your mind, there's somebody on the other side of every trade. So every incremental step it goes up, that is somebody, a new person coming in and saying, if I buy it here, my opinion is it's going to go higher from here, so I'm going to buy it here. And at the same time, it's somebody on the other side saying, wow, it got this high. I'm definitely going to either get out of what I have or I'm going to short it here because my opinion is it's going to go lower. So try to imagine in your mind at any price point for any product, whether it be, stocks, bonds, whatever, there are people on each side that say, this is the point where I think, I'm willing to sell. I'll bet my money that I'm going to sell it here. And at that same price point, there's somebody saying, I'll bet my money that I'm going to buy it here. I think sometimes you kind of think of things in a vacuum, like, well, everybody's doing this, and you don't think, well, there has to be somebody selling for everything you buy, right? So necessarily, there are people that think the opposite of you at any one time in the market, and I would challenge you to consider the opposite view at all times because it is out there. And there we have it. So just wanted to update you yesterday, playing with Lululemon, very strong. There's a lot of buyers out there. You can feel it. With the market was down, the NASDAQ was down 100 and something points yesterday to start with. And it moved lower, but at the same time, Lululemon, which started down, I think $3 or $4, every time there was the slightest nudge to the upside in the market, Lululemon would uptick, and it's just looked very, very solid, which has led me to not stay short or selectively pick out, if I want to short it, I'm thinking, well, I'll let it rally first, and then when it's at a high level, then I might jump in a little bit. But if we look, Lululemon the last couple sessions, very, very strong. We can see this ramp. Look at this ramp here. Okay, so we did have this weakness and this big down move from 321 down to 295 a couple of sessions ago. But since then, just the ramp up. Look at, there's a volume spike here on the close on Wednesday. Look at that. It looks like right after the close, there's a big print here. I'm not quite sure what that means. Anyway, I challenge people to be careful out there. The NASDAQ has felt just like a monster lately, and you can kind of tell that it is all program trading, computer trading, computers like battling each other. You'll see, like usually when you watch like the NASDAQ trade, you'll see it like kind of gain strength, and then it's kind of bidding up, it's moving up, it gains momentum in one direction or another. But the last couple of days, you just see it, and it just rips. It'll like rip up $50, and then just it'll bounce between like up 10, down 10, up 10, down 10, and just people are just like, sell me $10 through the offer, buy me $10 through the bid. And it's just all over the place like a monster, and you really can't. It's like there's no rhyme, no reason. It'll just rip in one direction or another, irrespective of what the rest of the market's doing or anything that's going on. And you just feel like it's these battling computer programs that are fighting with each other in a way. And it just felt like a monster, the NASDAQ yesterday. What I do a lot of times is I pull up. Here's what I look at when I'm watching the NASDAQ. Okay, so I have this Thinkorswim thing and the symbol NQ. I'll pull it up. And I'll see if I can get this straightened out here a little bit. So here, there's all these buttons on the very right side of the screen here. And if I press the one TS, it shows time and sales. So a lot of times I'll have the chart, and then I'll have the the bid and offer thing here, and then I'll have time and sales. And it's funny, sometimes what's happening in the middle here will lead what's happening in time and sales. Other times, time and sales will lead. But there's these buttons here, plus and minus, and when it starts moving really fast, I'll hit minus, and what it does is it makes it from showing every quarter of a point to showing like every half a point. So because if you leave it at a quarter of a point when it really starts rocking, you can't see anything because this thing is just moving all over the place, and it's actually better to watch time and sales to see what it's printing. But I mean, yesterday, like near the close, this would print and it would be like $10 difference between one print and another, and it was just raging all over the place. I mean, it's just, the volatility is extreme. Now, what's happening though is that it's not really moving as much like from close to close as it is during the day, just ripping around back and forth. But you really feel like it, like the wheels are spinning off the truck here or something as it gyrates back and forth. Now, I don't necessarily mean that is maybe a bearish sign. It might not mean that it's going down, but it just means that there's this uncertainty, and you've got these program trading stuff going on behind the scenes, algorithms and stuff that are just ripping this thing all over the place. And you can tell that like the bids and offers on other components in the NASDAQ are related to this, because you'll see as the NASDAQ like moves, like it jumps 10 points, you'll see like the bid in Apple will jump at the same time. So the stuff is like the computer programs are all connected. And that makes sense, because if you think about it, well, there's always an arbitrage between the futures in the NASDAQ and a basket of stocks. So for example, if the futures move way up, but Apple doesn't move way up, then you could buy Apple and sell the future, and you'd have you'd lock in money when that relationship came back into line. And so you can tell that the programs have this thing that keeps all the main components in the NASDAQ in line with the futures, and thus when you see the futures jump, you see automatically the prices of all these other products sort of jump as well. And if they're illiquid products, then it can move the bid offer on these less liquid products a lot, just because these futures pop, because maybe the futures go bid and there's just not many offers in that moment, then you can see these products just bounce around. Anyway, it's just been fascinating to watch the market the last couple of days with the NASDAQ just raging around back and forth. It's been pretty incredible. What's up, Anti-God? What's up, Tom? Nice to catch you. The vaccine is an if rather than when. There's institutions that will be bullish. Yeah, that's a good point, Philip Collier. We talk about this sometimes. Like my dad will ask me, well, how's the market different now because of all this program trading and stuff? And we know that when an institution comes in and needs to buy a lot of shares, if they put some sort of market order in, we know that market order is being manipulated. So, for example, computer systems that are very fast see the market order come in, and so what they'll do is they'll buy any offers that are ahead of it before the market order really hits, or before the market order can kind of respond. And then, so they'll buy up all the offers, and then they'll try to sell it back to the person paying the market at a slightly higher price. And so there's all this funkiness going on. Now, my response to a lot of that as a trader is, if you put limit orders in as opposed to market orders, nobody can really mess with you too much, because you set the price that you want to pay for something, and you either get filled or you don't, but you're not getting like chiseled for like 50 cents or 20 cents. That's the difference in this market from a long time ago, is that any sort of market orders or whatnot, there's all these chiselers coming in and like trying to make 20 cents by, like, they see a bid coming in, so they're going to try to buy it ahead of you and sell it to you 20 cents higher. And there's a lot of that going on with the program trading. And yes, I agree, Tom, with the vaccine if rather than when. Obviously, there's a lot of candidates for a vaccine out there, and I'm no expert on these things at all. I'm just like everybody else, just a layman. But there's all these candidates out there. But just from my Twitter feed and talking to other traders on Twitter, many people are not comfortable with just jumping into putting a needle in the arm of the vaccine unless it's been tested. And there's this, I think, a reasonable fear in the public about people rushing this stuff to market before it's been really analyzed appropriately, and there is a fear of getting sick from that stuff, and I understand that. So it's almost like the faster vaccine comes out, the less researched it is in a way. But yeah, there's a lot of people that are saying they wouldn't take a vaccine if it came out. Now, we don't need, from other diseases like measles and mumps and all that stuff, we know that we don't need everyone in the population to take a vaccine to actually insulate the population from getting sick. We only need a certain percent. I think like if something like 40% of the population took a vaccine that worked, that would start to insulate other people from getting sick, and that would certainly help things out a lot. But as far as people just coming in and thinking like this vaccine thing is going to be the magic cure that makes this market go higher, well, that's the narrative this week, but next week it could turn into something completely different. It could go back to like, oh, well, the tariff situation with China is what the market cares about now, and it's all about that. Or it could be something to do with the debt. Remember, we're accumulating a ton of debt here, and they're going to have to pay for it. Now, the federal government can always print more money, but local governments many times have a mandate that they have to balance their books, and that's going to be an increasing problem here. Now, some of these stimulus packages and whatnot, they allow you to not pay your rent for a couple months or something, but they don't forgive your rent. So a lot of people like haven't paid their rent or their bills or their electricity bill or their heating bill for a while, and that stuff is going, at some point they're going to have to pay that. So there's this stuff accumulating in the background that's problematic, I believe, and none of this seems to be reflected in the market to me. So we really have to keep that in mind. Now, I'm not saying that I know the market's going to go lower and that being bearish is for sure and all this stuff. And I just caution you, when people come out and tell you they know what's going to happen for sure and the X is going to happen, be skeptical of that, because if someone you're talking to doesn't acknowledge the fact that nobody really knows what's going to happen, then they just are fundamentally misunderstanding the market, in my point of view. Keep your ears down to the ground and listen to that background. But it is interesting to me to see what other people's views are. And, I sit there sometimes, especially like if I have a short position on, I'll sit there and go, why are people keep buying this market? Who would buy the NASDAQ paying, what was the highest the NASDAQ got to, 10,700 and something? Who's coming in and buying the NASDAQ right now? And the answer is, there's a lot of people out there that have 401ks or whatnot that automatically put money in the market all the time, right? There's it could be any number of reasons why the market gets bought at any moment. And also, there's only a limited number of places for people to invest money, okay? Everybody's constantly making money, and a certain percentage of people all around the world need to invest it somewhere, and the U.S. market has had the best returns. So regardless of anything else that's going on, there's a steady flow of money into the market. So for the market to go down, there has to be enough sellers to balance out all those buyers to keep the market from going still higher, plus more for it to go down. So it's not an easy feat to make the market go lower. And when you analyze things just by saying like, well, Netflix was here before pandemic hit and now it's here, so that means automatically it's going to go lower because they haven't sold more Netflix memberships. That's kind of oversimplifying things, right? So the best we can do is try to see what's going on right now in the market and react to it. For me to stand here and say I know better than the market and I know the market is pricing things wrong and it's going to go do X, Y, or Z, that's a pretty arrogant thing of me to say, and the basis behind it is not so strong. So the best we can do is to try to get in sync with what's happening in the market at the time and roll with that, in my point of view. Who's buying the crazy high Tesla calls? Well, sometimes people buy out of the money calls so that they can sell something fatter against it. So, for example, in Tesla, and this is something that I wonder about too. It's the same thing with like UVXY. You know, when you've got UVXY, right? We know UVXY is always rolling lower over time, but if you go out to like December, right? The 100 calls in December are $3.60 bid in UVXY. Now, there's no, the chance that UVXY is over 100 in this next January is so infinitesimal, and yet people are willing to pay, $400 per call. $4 is $400 per call, and go up to the 150 strike, right? The 150 strike, 22-cent bid at 340. So let's say you can definitely sell these for $2 probably. Who, when you think about it in a vacuum, it's like, who would pay $2 for the 150 call in UVXY? That seems totally ridiculous. However, it's not ridiculous if you think about, well, if I buy that call for $2, it allows me to get long the market and buy all these tech stocks. Maybe it allows me to get long Tesla because I know that this is going to kind of hedge me against a crash to some extent, because this doesn't need to get to 150 for these calls to continue to maintain their value. And with Tesla, I dodged a huge bullet by not selling some of these calls, but yeah, people, a lot of times this stuff is a hedge. With Tesla, if you buy one of those higher calls, maybe it allows you to sell something fatter against it, right? So if we look in Tesla in October and we see, the one thing I hate about Tesla is just like having to roll through all these strikes just to get to where you want to be. It's like, I was looking at the 15 something call the other day, and I looked at the 500 something call. I was off by $1,000, and I was looking at it. I was like, this pricing seems weird. But yeah, the 3,500 call in October is $53 bid. Now that sounds just insane, right? That sounds just insane. The $3,500 call in Tesla, right? But we've seen this thing giddy up and go. I mean, I was looking to sell the 1,800 calls in August. I was gonna sell this call, the 1,800 call, like a month ago, and I was like, wow, I think it was either $5 or $8 for the 1,800 call in August, and I was like, that's a free $500. There's no way. This was when Tesla was like 900. I'm like, there's no way it's gonna double. It's gonna double in like just over a month. No way. And I was going to sell this 1,800 call, right? It was like $5. Guess where it is now? It's $123 bid. So, the options and the trading world has a way of, when you say there's no way this could happen, it has a way more higher than the actual probability of making those things happen, especially when it would hurt you if that happened. I have a friend who is trading BRIEX mines. I don't know if you're familiar with the BRIEX story, but it was a company. They said they had found gold in, I forget which country it was. They'd found gold, and this company was, exploding to the upside, BRIEX mines. Well, it turned out that they hadn't found any gold. And the thing went to like zero. And my buddy had sold some puts that were a great price, really fat puts that there's no way it was going down there. Well, guess what? It went down there. So, Murphy's Law applies to trading in a big, big way. Neo. Yeah, so we were talking about this before on Twitter. Neo versus Candy versus all of these different ones. All of the different electric car companies. and I didn't have I was trading Neo and Candy for a bit a couple years ago, and Candy wasn't bad, but Neo just kept getting pounded into the dirt. These things are tough. Chinese car companies. All right, so there we are. I'm going to let you get on to the markets here because I've been babbling for long enough. But thank you. I appreciate when people put comments on my videos saying like, I totally disagree with you. You're not seeing things the right way. You're an idiot or whatever. You're a schmuck. Please continue to do that because it forces me to examine what I'm talking about and defend it. I encourage you to do the same. What I encourage people to do is to check out different traders' viewpoints and surround yourself with different viewpoints. You'll see that some people will be hot at certain times and some people won't. You'll see some people will be contrary indicators. Every time they say to buy, you should really sell. You'll see people that, if trader A and trader B are both on the same page, then the market's going to rally. But when trader A and trader B have opposite opinions, and that means the market's going to sell off. You'll find that following different traders will give you there'll be signals to you in your mind, and you'll start to see how it all comes together for everybody. Thank you, Anti-God, for your kind words. Thanks, Tom, for all of your comments on the videos. I really appreciate everything, and let's go.